and frankly, any sort of biomass conversion process, whether it be composting or gasification with energy and some biochar, and so this is what I've come up with in terms of a way to provide a guide for project developers out there that are interested in doing a plant, that want to kind of understand some back of the envelope kind of calculations of what is the most, or what's the most potential profit that I can generate with certain revenue or certain stream of biomass that I have available to me. So I've been calling it the 5-ton challenge. I somewhat arbitrarily chose 5 tons, but there's a lot of reasons for it. I think it's one of the more sustainable sizes. You can get some economy of scale, but you also aren't having a huge centralized plant. So here's what the purpose of the 5-ton challenge that we designed, and so the main gist of it is to find a way to compare all these different options of converting biomass into something usable on an apples-to-apples basis, and so that we can find the best use. And so obviously, you know, as we've seen with the previous presentation and throughout the conference so far, there's many choices of what to do with this, with biomass. So from a developer's perspective, you'll roughly go through a 3-step process. It's obviously very simplified, but basically what we're looking at is like an opportunity identification, where you identify your site, you identify what biomass streams you have available to you, and you start kind of thinking about what technology options are out there that can work with your situation. And then you go into this technical evaluation, where you actually do some initial analysis about the technical suitability of different technologies and different processes and setups for your particular site and feedstock. And then and you also have to do an assessment of your own interest in whether you want to be a 24-hour plant, or you want to be, do something where you can do like composting, which is, not as labor-intensive type of activity. And then finally, once you kind of have narrowed down your choices, you go into this economic evaluation, where you're going to figure out what your capital requirements are, you're going to figure out what your operational economics are, and then determine your profitability potential. So that's really the focus of what we're doing here. And so this is kind of a reiteration of the apples-to-apples approach, which I encourage everyone to use, really, when you're talking about a biomass resource that you're trying to do something with. Try to make it apples to apples, because there's a lot of different technologies out there, and they're done in different scales, but the only way to truly compare is find the common variable among the options, which is how much biomass you're putting through it. So although the model that we developed can be made to include any sort of option that's out there, and everybody can put their own numbers in it, we just did a few different options. We did composting, biopower with no biochar production, just gasification, and biochar only. Then energy and char optimized for power, like kind of the gasification units that have been converted to also producing char. And then Interra energy with biochar, which is optimized for biochar production. And biochar production yield and the biomethane production quality. So this is a little snapshot of one of the sheets of the spreadsheet workbook that we created, and it's got nested details, but I shrunk it so we can kind of fit on one page. It's about 150 lines long or something. That'll be actually available for people to download off our website. For those who are interested, and we'll also be able to, if you want us to just send it to you via email, we'd be happy to. And then so, I just want to spend a second on the relevant assumptions when you're talking about this kind of analysis. It's obviously, I mentioned, it's the 5 tons per hour, or 37,500 dry tons per year. And always remember, always talk about biomass in dry tons when you're comparing. That's the only way to get the apples to apples. And we're talking about waste feedstocks only, and all the products that come out of the machines or the processes are sold wholesale. Yes, we understand that everybody can increase their margins by upgrading bagging in smaller bags, etc. But we're just trying to do a wholesale for all of that. And then electricity sale price about 10 cents per kilowatt hour. It's roughly what you're going to average in California. That's why it's that. And biochar sale price $500 a ton. That's currently very low. It'll probably even get lower in the future, but that's what we use. It's something that it's a variable, it's adjustable in the model. And then compost, $15 a ton. So here we have the results. So we broke it out into the costs are on the left, the revenues are on the right, and all the costs are, all the capital costs, for instance, are annualized on it's over a 20-year basis with a 10% interest rate, but it really, we played with it, it really doesn't mess with the end result of the decision model. But we tried to get an annualized figure for each one of these projects. And so that's what it's looking like. Go figure, Interra Energy comes up number 1. Yeah, 5 minutes late. And, but then energy with biochar is about 17% profit margin behind. Biochar only, still actually very profitable. Low, that's if you can sell it, so there's a little bit more risk associated with markets. But, and then composting comes up at about 19%. These figures seem to be roughly in line with what we've been seeing in the industry over the years. So we're happy to see that in our model. It's kind of it's doing a good fit. So the most important factors in this model were the prices of the sale prices of the products. So we're looking at, and it's just these three that actually, I call the important variables the ones that can actually change enough to where it will change the rank of what's the best profit you can get. So biochar sale price, electricity sale price, and compost sale price. And some insights from that, from this model. If you're optimizing for biochar, you're gonna be able to stay on top of the game until the price of biochar goes down to about $146. I don't see it going that low in the near future, but in that case, you would have it'd be a better idea to sell or to optimize for electricity. Still make biochar with electricity. On the electricity sale price, if you keep the biochar price at $500 a ton, you are going to get you'd have to raise the electricity sale price up to 33 cents per kilowatt hour to get the energy and biochar production optimized for energy up to the top position. And to get the biopower plant up to first position, you have to go up to 78 cents, which isn't really going to happen. And that's kind of in keeping with the experiences that people we've spoken with. And so compost sale price has to get up to about $54 a ton to be the most profitable option. And so one of the things that's nice about doing the apples to apples comparison is that when you're talking about tipping fees, or if you're going to include tipping fees, it's all going to be the same for each one. Same with processing fees when you compare. You have the whole same front end system, same operational aspects that you need to include in the model associated with receiving, except for compost, which is a little bit different, but it was done in the model in a way that seems to fit with reality. And I just wanted to make a quick little note about why Interra's technology does what it does and why we think it can do what it can do is this comparison to Pacific Pyrolysis, their system that's seemingly having some good commercial success, at least on the stock market and in Australia. And but just a comparison of the number of systems that we need to do the same exact thing that they're doing. we can cut out 3. Gas clean, no more gas cleaning required, and no more extra char conditioning. So it's all kind of in one integrated unit, which is very cost effective. And then conclusion is go with Interra Energy. And I'd love to share more about what we're doing and share our model with you. Any feedback on the model is greatly appreciated, and it's something that we plan to keep available and update when we feel like it's necessary to update, and to keep it accurate, and would appreciate that feedback. So, as Peter mentioned, we do have an offer to, if there's any project developers out there that are interested in moving forward on something, we happen to get our cash grant, cash in lieu of credits program or application in, and it seems, and so we're all set up basically to get a $620,000 refund once we build our plant. So we're offering that full refund to the funder of the first system. They get to keep the best system out there, and it pays for itself basically with that. So with that, I'll end this little piece of the talk, and thank you very much for your time and attention.
I shouldn't be a moderator at these sessions. I'm so tempted to jump in on the substance. I'll indulge myself very briefly. Tom mentioned the fly ash coming out of some of these biomass plants as a possible biochar. If you're interested in following up on that topic, I've got some I've got an interesting war story about that. And anyone who wants to talk about doing better than 10 cents a kilowatt hour in California, I'd like to have that conversation as well. So with that, I mean, to offer my